Level 1. The number that does not match. The file is open on your screen and you are not breathing. Not dramatically, not visibly. Just a specific suspension that happens when your brain processes something before your body catches up. A vendor payment, $340 million, routed through a subsidiary in Luxembourg that appears in no internal directory you have ever accessed. Attached to a project code that returns 0 results in every system you can reach. You are a senior internal auditor. 6 years at this company. You know what a rounding error looks like. You know what an accounting timing difference looks like. You know what a legitimate intercompany transfer looks like. This looks like none of those things. You close the file, you open it again. The number is still there. The company you work for has a market capitalization of $1.4 trillion. Its name appears on buildings in 7 countries. Its quarterly earnings calls are watched by institutional investors managing trillions in pension funds, endowments, and retirement accounts. It employs 412,000 people worldwide, including you, sitting at your desk on the 11th floor, staring at a number that should not exist. You write the vendor name on a post-it note. You fold it once. You put it in your jacket pocket. You close the file. You go to the bathroom and stand at the sink with the water running and look at yourself in the mirror for 3 minutes. You do not look like someone who just found something. You look like a person washing their hands. That gap between what is happening inside you and what is visible on the outside is the first skill the system requires of you. You did not know you had it. You do now. Level 2, verification. You spend the next 3 weeks becoming someone you have never been. You do not use company systems for anything that could log a query with your credentials. You use a personal laptop purchased with cash. You use public Wi-Fi at a library 8 miles from your house on 2 separate occasions. You access a legal research database through your wife's law school alumni credentials. Credentials she has not used in 9 years. The vendor does not exist. The registered agent in Luxembourg represents 400 other entities across 12 jurisdictions. The project code attached to the payment appears in one other document in the company system, an archive memo from 6 years ago that requires senior executive credentials to open. You cannot open it. The fact that it exists tells you enough. You find 2 more payments, $87 million, $210 million. Different vendors, same jurisdiction, same untraceable structure, same non-existent project codes. Total, $637 million. You build a file on an encrypted drive purchased with cash at an electronics store in a town you have never visited. You organize it the way you organize every audit, methodically, chronologically, with source references and timeline notations. You do not know yet that this file will be read by federal prosecutors. You organize it because organizing is how you think. Because if you stop organizing, you will have to sit with what you have found without the structure around it. At night, you run through the people who could know. The CFO, his direct reports, the legal team that approved the subsidiary structure, the external auditors who signed the financials without flagging the payments, the board audit committee that reviewed those statements and said nothing. The list gets longer the longer you run it. You stop when it includes someone you had lunch with on Thursday. Level 3, the attorney. You make the appointment under a name that is not yours. You pay the consultation fee in cash. You take a train to a city that is not your city and walk 6 blocks to an office building that has nothing to do with your life. The attorney is a woman in her late 40s. She listens without reacting. She takes notes in a legal pad with the focused calm of someone who has heard things before that rooms were not supposed to contain. When you finish, she asks 4 questions. After the 4th question, she puts down her pen. She tells you what you are describing constitutes securities fraud, wire fraud, and probable violations of the Foreign Corrupt Practices Act. She tells you your options. She tells you one of them is to walk out of this office, destroy the drive, and never speak of this again. She says this without inflection, without recommendation. She tells you about the SEC Whistleblower program. Awards, between 10 and 30% of sanctions collected above $1 million. Anti-retaliation provisions under Dodd-Frank. Identity protections throughout the investigation. You ask what happens to people who report things like this. She pauses for 2 seconds. She says it depends on the company. You both know what company this is. Her pause was not uncertainty. It was honesty. You take the train home. You sit in the window seat and watch the city pass and understand that you have crossed a threshold in that office that you cannot uncross. You did not file anything yet. You did not sign anything, but you walked into a room with the drive and told a securities attorney what was on it. You are no longer the person who found something and said nothing. You are the person who found something. Level 4, the submission. The SEC tip is filed on a Tuesday. Your attorney submits it. Your name does not appear. You are tipster reference number 74419B. The supporting documentation, 47 pages, organized, sourced, timestamped, uploads in a single encrypted file. You go to work that afternoon. You sit at your desk. You open a routine reconciliation. You cross-reference figures. You do the work exactly the way you have always done the work. The CFO walks past at 4:15 and nods. You nod back. Your hands are steady. They shake in the parking garage. 90 seconds. Then they stop. This is the second rule of the system you are now inside. Compartmentalization. The you at the desk and the you with a case number must never occupy the same visible space. The company is watching everything, though it does not know it is watching for you specifically. Not yet. You keep the two versions of yourself separated with the same precision you applied to the encrypted drive. The SEC acknowledges receipt within 10 business days. Case number assigned. Investigation opened. You now have two lives running simultaneously. You are not sure which one is real anymore. You are not sure that distinction matters. Level 5, the silence that moves. 14 months pass without a word from the SEC. You go to work, you file audits, you receive a satisfactory performance review. Not exceptional, not flagged. You are exactly as invisible as you have always been, and you have worked very hard to maintain exactly that. But the company is moving around you in ways you can feel through the walls. The CFO's office restructures. The Luxembourg subsidiary is quietly dissolved. You find this through a corporate filing search you run monthly on your personal laptop. 2 members of the CFO's direct team leave within 3 months. Both departures described as voluntary. Neither person gives a public statement. The external audit firm rotates its lead partner, presented as standard rotation. It is not a standard rotation year. The company's legal department adds 6 attorneys in 4 months. At the annual all-hands meeting, the CEO speaks for 12 minutes about governance, accountability, and the company's commitment to its stakeholders. The language is specific enough to signal something and vague enough to prove nothing. You sit in the 3rd row and applaud at the appropriate moments. You tell your wife, not everything. Enough. She sits still while you talk. When you finish, she asks one question. Can they find out it was you? You tell her the protections are significant. She nods. She does not ask again. She begins sleeping less. You notice this and do not address it because there is nothing useful to say that you have not already said. Your daughter calls about internship applications. She mentions the company. You tell her to look elsewhere this year. She asks why. You say the timing is uncertain. The call ends awkwardly. You sit with the phone in your hand after she hangs up and understand for the first time that what you set in motion cannot be contained to you. It was never going to be contained to you. You knew this and did not fully know it simultaneously until this moment. Level 6, the room with federal investigators. 22 months after the filing, your attorney calls on a Wednesday afternoon. The SEC wants to interview you. In person, formal, recorded. Your counsel present throughout. You take 2 personal leave days. You tell your manager it is a family matter. You drive to a federal building in a different city. You wear a suit purchased specifically for this meeting. You are not certain why the distinction matters to you. It does. The interview runs 6 hours across 2 days. The investigators are thorough in the way that reveals how far they have already gone without you. They have documents you have never seen. They ask questions whose specificity tells you they have been inside the company's systems with authorities you do not possess. They are not confirming your findings. They are extending them. The total figure referenced in their questions is not $637 million. You ask your attorney on the drive back what the full number means in terms of the case. She tells you. You pull into a gas station parking lot and sit with the engine running for 11 minutes before you can continue driving. The thing you found 14 months ago in a routine procurement audit was not the whole thing. It was an entry point. The investigators followed it somewhere you never went. The scale of what is underneath the $637 million you identified is a different order of magnitude entirely. You have been thinking of yourself as someone who found an irregularity. You are not that. You are the person who opened a door into something that was already much larger than the door. Level 7. Exposure. The story breaks on a Thursday morning, not from the SEC, from a journalist who has been working a parallel track for 8 months, internal sources, regulatory filings, the same structural patterns you identified, arrived at independently. The SEC investigation becomes public the same afternoon. The company's stock drops 22% in 4 hours. Trading is halted twice. Your name is not in the initial article. Your name is not in the SEC's public filing. You are referenced as a current employee with direct access to the relevant financial systems. By Friday, your name is circulating internally. You do not know the specific mechanism. It does not matter. What matters is that the company's response to the investigation now has a human target, and the target is you. You are placed on administrative leave pending an internal review of your access to certain restricted financial records. The HR letter does not use the word whistleblower. It uses the phrase unauthorized access. The phrase is inaccurate. It is designed to be inaccurate. It is designed to create a record. Your LinkedIn profile received 63 views in 36 hours. You recognize the companies conducting 3 of the searches. They are not companies you have approached. They are companies that have existing relationships with your employer. Your daughter calls. She has seen the news. She is quiet while you explain what you can explain. Then she tells you she is proud of you. You were not expecting this. You do not respond for a long moment. The silence on the line is the most honest silence you have shared with another person since you found the file. Level 8. The machinery. You moved. The Senate subcommittee hearing is scheduled 7 months after the story breaks. You are not a witness. Your attorney negotiated this. Your identity remains formally protected under the program. But the hearing cites your original documentation 41 times across 3 days of testimony. The 47 pages you organized on an encrypted drive in a town you had never visited before are now part of the congressional record. The CFO resigns a week before the hearing. His statement cites a desire to spend more time with his family. 2 of his direct reports are indicted. The external audit firm settles separately for $340 million, the same number that first appeared on your screen. The company itself negotiates a deferred prosecution agreement. The total financial penalty across all parties exceeds $4.3 billion. You watched the hearing from a different city. You moved 4 months ago, not because you were required to, because the old house had become a geography of the 2 years that followed the post-it note on the nightstand. Every room held a version of a conversation you needed to stop having. You are not working in corporate finance, not because you cannot legally, because your name is attached to a story that every compliance department and every major financial institution has read. Some of them regard you as a person of integrity. Others regard you as a person who creates problems. In a practical hiring context, the distinction is less useful than it sounds. You consult now. Fraud detection, internal control design, whistleblower program structure for companies that want to identify their own problems before a federal investigation does. The income is real. The work is real. It is not the career you planned from the 11th floor of a building whose name appeared in 7 countries. Your wife says you sleep differently now. Not better exactly, differently. The specific quality of wakefulness that ran from the night of the post-it note to the morning the story broke was unlike any tiredness you have known before or since. It was the weight of asymmetric knowledge, knowing something the world did not know yet, and carrying that asymmetry alone inside a body that was required to perform normalcy every day. That weight is gone. What replaced it does not have a clean name. It is not peace. It is something more structural than peace. A specific, quiet knowledge that the $4.3 billion in penalties represents real money returned to the institutional investors, pension funds, and individual shareholders who were on the other side of a fraud that was operating before you found it and would have continued operating after you if you had closed the file and kept it closed. You keep the encrypted drive in a box in the garage. You have not opened the box in 2 years. You know the drive is there. You do not need to look at it. Level 9. What remains? You are sitting in a house the world does not know the address of. Your name is in a congressional record, a federal settlement document, and a $4.3 billion enforcement action that reshaped the compliance landscape of an entire industry. Your identity remains formally protected. Informally, the people who matter in the world you came from know exactly who you are. Some of them respect you in a way they would never say publicly. Some of them will never work with you and will never say why. Both are permanent. Both are accurate. Both are the cost of being the person who opened the door. You think sometimes about the moment before you found the file, the unremarkable Tuesday morning, the routine procurement audit, the version of you who sat down at that desk expecting nothing interesting to happen. That version of you is gone, not because of what you did, because of what you saw. You cannot unsee a $637 million irregularity that turned into a $4.3 billion fraud. You cannot unsee the CFO nodding at you in the hallway the afternoon of the day you filed the tip. You cannot unsee your daughter's face in the one video call where you finally told her enough of the truth that she said she was proud of you. The system you entered when you wrote the vendor name on a post-it note is larger than you understood when you entered it. It is larger than the company. It is larger than the SEC enforcement action. It is larger than the congressional testimony. It is the system of what happens to a person who knows something true and decides, for reasons they cannot fully articulate at the time, to act on it. That system does not reward you cleanly. It does not punish you cleanly. It changes you in ways that are permanent and mostly quiet, and occasionally, in specific moments, exactly right. The post-it note is still in the box in the garage. You are not going to look at it today. Somewhere tonight, a junior analyst at a financial institution is 60 pages deep into a fourth quarter vendor reconciliation. The numbers are not matching. Not by a rounding error, not by a timing difference. She writes something down on a piece of paper. She folds it once. She does not know yet what she is holding. She is about to find out.